car is technically just a metal box placed on four wheels and an engine to drive it forward without human labor. The utility of this product is to transport people from one point to another much faster than our legs ever could. That is the reality. But the perception is quite different. A car can decide someone's social status. It can decide what kind of friends a person can have, and it can also decide what kind of wife a person can get. In economic terms, a car is a consumer durable, and people buy it out of their discretionary spending, which means it is not a necessity like food, clothes, or fuel. In emerging economies like India, when the per capita income starts rising, people's discretionary spendings go up fast and high. The fact that car penetration is extremely low in the country is going to create a fast-growing and booming market in the near future. There are many companies competing to dominate this market, and Hyundai is one of them. This company is the third largest automaker in the entire world and already listed on global stock exchanges. Recently, Hyundai India has filed a DRHP with SEBI and is likely to bring their IPO sometime soon. Hyundai is big and well capitalized. The question is, why are they raising money from the Indian market? Let's find out. Namaste and welcome to Retail Investing. In the year 1947, the son of a poor farmer in Korea decided to start a construction company. The Korean government of the day was encouraging enterprise and they assisted this new business. So the construction company rapidly expanded into many industries and the automotive industry was one of them. The name of the original company was Hyundai Engineering and Construction Company, which later gave birth to Hyundai Motors, and that poor farmer's son became Korea's richest man. Today, in 2024, the Hyundai Group is one of the chaebols of the country, a Korean designation for the richest business families. And Hyundai Motors has become the third largest car maker in the entire world. When it comes to the Indian car market, it is an oligopoly, meaning a few players dominate the industry. Hyundai Motors is ranked number 2 in terms of cars sold, and this company has held that position since 2009. The top 4 companies, including Maruti Suzuki, Hyundai, Tata Motors, and Mahindra, have 80% market share. But the competitive landscape is changing very fast. Maruti Suzuki's share has come down from 52% to 41% in the last 5 years. People's aspirations for owning SUVs instead of tin cans is a likely reason for the fall. Tata Motors has gained big grounds in the last 5 years, from 6% to 11%. Successes of their EVs and new SUV models have played a big role in that. Mahindra has always been famous for their SUVs. The very popular XUV series and the redesign of the iconic Scorpio have helped Mahindra expand their market share from 7% to 11% in the last 5 years. Toyota's Fortuner Legender sells in smaller numbers, but clearly is the undisputed king of Indian roads. I don't think any other car can ever take that position away from Toyota. Honda is apparently losing the game. Their share has fallen from 6% to 2% in the last 5 years. Hyundai's own India-specific models of compact and small SUVs have become immensely popular, and that clearly reflects in their revenues. Hyundai has maintained a 15 to 18% market share for decades. The rise of small and mid-sized SUVs has indeed played a role in Hyundai's success. But there is something else which is even more important. The Federation of Automobile Dealers Association, in short FADA, conducted a study on customer satisfaction with the dealers of various car companies, and the result was surprising. Tata Motors ranked among the lowest when it came to satisfying customers. Apparently, people like the new Tata cars, But nobody prefers visiting a Tata Motors showroom. Hyundai, on the other hand, is miles ahead, or should I say kilometers ahead, of any other company with a score of 852. Maruti Suzuki, which sells the highest number of cars, is a distant second. The importance of this factor can clearly be seen in the sales numbers of the companies. Building good relations with the customers is as important as making a good car. Hyundai has proven that. Presently, the car per 1,000 people in India is only 26. This is extremely low when compared to other emerging economies. To catch up with countries like Brazil, Mexico, and Russia, the car market needs more than a 10x growth. As per estimates by the International Monetary Fund, India is going to become an upper middle income nation by the year 2031. Rising disposable incomes can see a huge growth in car ownership in the coming decades. The Indian stock market is going through a quite interesting phase, especially the IPO market. Almost every IPO of any significant company is getting highly oversubscribed. This simply means that the companies are getting a lot of cash easily while selling the same number of shares compared to a situation in which valuations would have been modest. Mutual funds are holding high levels of cash thanks to the SIPs from retail investors, and a significant portion of that cash is likely to get into the IPOs, and the result will be high liquidity levels and premium valuations for the IPOs. It's a quite attractive opportunity not only for domestic companies but also for global corporations to inflate their valuations. Let's see how. Hyundai, for example, is trading at a price-to-book value of around 0.5 in the Seoul stock market, while in the Indian market, a similar company like Tata Motors is trading at a price-to-book value of around 4. That is an 8x difference in valuation, and this is the reason why many global MNCs are looking forward to the Indian market for their equity funding. Hyundai Motors plans to raise around $3 billion from this IPO, which is a huge number considering the size of the Indian IPO market. LG Electronics, another giant from South Korea, also has plans for an IPO. LG is trading at a price-to-book value of around 0.7 in the Seoul Stock Exchange, while its peers like Voltas are trading at a price-to-book value close to 10 on the Bombay Stock Exchange. Premium valuation is definitely a good news for these businesses. But what about retail investors? So here we have the financial statements from the DRHP filed by Hyundai Motors India. All figures are in millions. Very well. Revenues are at 521 billion INR. That's a massive number, and it has been growing fast over the last few years. And by the way, this figure is for a 9-month period and not an entire year. So the growth still continues in financial year 2023 as well. Profits are roughly 44 billion. This is the company's balance sheet. Existing plant and equipment is quite big, and more work is undergoing. If we look at the cash position, it was huge in financial year 2022, but after that, it fell to 1/5 of that number. Probably on expansion plans they have spent the money, and that is the reason why they plan to raise more money via IPO. As of 2023, Hyundai has invested more than $5 billion in its India operations, and they are still expanding their manufacturing by acquiring a new plant at Talegaon, Maharashtra. For Hyundai Motors, India is the second largest manufacturing and supply chain ecosystem outside their home country of South Korea, and Hyundai is actually India's #1 vehicle exporter to the world. It looks like this company is very much committed to the Indian market. The debt on their balance sheet is small compared to some of the other figures we just went through. The cash flow from operations number is the same as the profit number, which is always a very healthy sign. Overall, Hyundai India's numbers are strong and inspiring. Hyundai has a weak point, and that is in the EV segment. The company does not have any popular electric car yet, and as a result has only 2% market share in the EV segment. Tata Motors is massively dominating the EV segment with 71% market share, and Tata Power is already dominating the EV charging infrastructure. Hyundai needs to catch up if the company has any plans to create wealth for its shareholders. Within the next 6 months, interest rates are going to come down significantly, which means cheaper car loans and as a result more car sales. Learning from history, we can assume that low interest rate scenarios can continue for 7 to 8 years easily. I think I have made my point.